Hello everyone and welcome back to XM.com. You are watching the weekly technical outlook video for the week starting Monday, February 5th. Well, the week ahead is expected to be less busier than the previous one, including the US ISM non-manufacturing PMI data, which are coming out in a couple of hours, the Reserve Bank of Australia's policy meeting on Tuesday, and Canada's jobs report for January this Friday. So the data make dollar yen, Aussie dollar and dollar loon important to watch this week. And starting first with dollar yen and the ISM non-manufacturing PMI data, forecasts suggest a stronger report for the services sector, which could basically reflect resilient consumption in the US, and that could potentially could further reduce the odds for a rate cut in the US, consequently helping the US dollar to move higher. We can see that the pair couldn't overcome the 148.30 territory that was a major resistance zone in January. Traders will be looking for a break above that bar before they target the next resistance at 149.70, while higher than that, they will probably pay attention to this ascending trend line from March 2023 at 150.80. If the recovery continues, above that region, then all the attention will turn to the 2022 and 2023 highs registered within the 151.89 and 151.93 territory. According to the RSI and the stochastic oscillators, the risk is still skewed to the upside, making a bullish breakout possible. However, if that proves a false signal, if we see the price pulling below the 148.30 bar, then support could next come around the 20-day moving average at 147 and probably also near the 146 number where the support trend line is located. The 50% Fibonacci retracement of this downfall is also within the same region, so any failure to hold here and an extension, negative extension below the 50-day moving average could lead the price towards the 38.2% Fibonacci of 144.70 and closer to the 200-day moving average, a break of which could then trigger a sharper downfall towards the 23.6% Fibonacci of 143. Now turning to Aussie dollar and the Reserve Bank of Australia's rate decision. The rate decision is not expected to cause volatility in the Australian dollar because investors are certain that interest rates will not change in Australia. However, what they will be looking for is for any dovish tweaks in guidance. They will be looking whether policymakers have stopped discussing about rate hikes and have switched to talks of rate cuts instead. If that proves to be the case, the Aussie dollar may extend Friday's downfall, which came after the upside surprise in the US non-farm payrolls report. So if this decline continues, then support could develop somewhere between 0.6450 and 0.64, where the price faced restrictions a couple of times during the previous months. Failure to rebound here could send the price down to this important ascending line from the 2020 low, currently seen at 0.6335. Now, if we look at the technical indicators, all the indicators are sloping downwards. The RSI is still within the bearish territory. The stochastics have also turned down, and the MACD has resumed its decline below its red signal line, which suggests that the risk is skewed to the downside of this market. Nevertheless, if we see an upside reversal, all the attention will turn to this resistance trend line and the exponential moving averages, which block the way up around the 0.6598 level. So I would like to see a clear close above the 0.6598 territory before I target the next resistance, currently seen at 0.67 and 0.6720 region. Then higher than that, the pair will probably try try to reach the lower band of this broken bullish channel seen at 0.68. Finally, looking at dollar loonie and Canada's jobs report due on Friday, expectations are for slightly higher unemployment rate, which could create some concerns about the labor market. The unemployment rate has been trending up over the since April, so another higher reading could probably raise calls for a rate cut in Canada. If that happens, if the unemployment rate continues to trend up, then the Canadian dollar may lose more ground, helping dollar loonie to climb above the 1.3480 resistance zone, where the flattening 200-day moving average is placed. That could also, if we manages to close above that bar, then the price may fight for a bullish breakout above the 1.3537 resistance territory from January, where the 50% Fibonacci retracement of this downfall is located. A successful break above that zone could help the pair to rally towards the 61.8% Fibonacci of 1.3622, where the price posed back in December, while higher than that, the 1.37 psychological mark could be the next target. The RSI and the stochastic oscillators are endorsing the bullish case. Nevertheless, if the price fails to climb above the 1.3480 zone, then it could retest this support line from November 2023 at 1.3460. The 50 and 20-day moving averages will be also closely watched around 1.3440 before the 2021 ascending trend line at 1.3390 and the tentative support trend line from December's lows come into view at 1.3390. Then lower than that, the price may seek support around the 23.6% Fibonacci of 1.3350 before it declines towards the lower ascending trend line from 2021 seen at 1.3270. So that's all for this week's important FX pairs. Thank you for watching and see you next week. Bye bye for now.